What's up, YouTube? It's Joe Catchpolia sitting on the couch, making some money, investing in fractional real estate online, as usual. Today I kind of really screwed up the beginning of this video, so I'm recording this after I recorded the rest of it. I cut out a bunch because I think it's worthless, but so hopefully there's not a continuity error here. But what I'm trying to do is get some feedback from everybody about what they like and don't like about all the different fractional real estate sites. If you're new to fractional real estate investing, this might be a really good video to watch because I'm going to go with a brief description about each one of the platforms. We're talking about, what I like about them and then what I don't like, and then maybe where I'd like to see some of them go. In general, a main goal for my channel is to hopefully get a group of us, a community together where we can actually help shape where fractional real estate investing goes in the future. I know that's kind of a lofty goal, like for a small YouTube channel like mine, but we're creating a community. There's a link to the Discord that I've set up in the description to this video. I'd love it if you all joined. There's, I don't know, somewhere around 40, 45 people in there already. A lot of good discussions. I feel like some of us have already made some changes on some of the sites, by getting together, talking about stuff, giving feedback to some of the providers. And so that's what I just wanted to take some time today and just talk about, where I think that we could do things differently. I have had a number of people who were working on their own projects that are going to bring new platforms to the market that have reached out to me for some feedback. And I had another one today. And I think that there's a lot of room for both improvement of the current platforms and also, um, for maybe new market participants to come and do a better job than a lot of the ones that are out there today. Uh, as usual, please like and subscribe. In the description to this video, there are links to all the places I'm currently investing. Please do your own due diligence on any of the sites and any of the properties before you invest yourself. I might say this again later in the video because, like I said, I'm just cutting this in there, but I took out about 10 minutes of me rambling, so you're welcome for that. I do apologize for the rest of the rambling that you're about to hear. But so I think we're going to jump into it, and I'm going to start to talk to you about each one of those. But please put your comments about either in the Discord or just in the comments of this video, if there's other sites I should check out, what you think, if you have other criticisms than the ones that I've had or other suggestions. I'd love to hear it. I've got to talk to a lot of the founders of a lot of these sites, and many of them are open to, really changing their product if it seems like it's going to, there's going to be more demand from investors. Right. So let's get back into it. So I'm going to just start off with the one I talk about most often, which is Lofty. Uh, what they do really well, I wish I could open their marketplace tab right now, but it's down at the moment. They're having some sort of, it says internal server error. But what I think that they do really well, they're a marketplace. And so this is sort of different from some of the others. In the company Lofty is not picking properties. Anybody can bring a property to Lofty and list it on their site and sell out, pieces of their equity on there. Um, it's been really interesting because there's some really great operators that are doing a good job, and I'm making money with some of them. There's a lot of trash properties that were brought onto the platform as sort of just exit liquidity. And then there's, a lot of stuff in between too. And I think that because it's a platform and because at the moment they don't have any sort of standards of reporting, or at least nothing that's very useful, it ends up, you have to spend a lot of time digging into each property. And so I think that it's both good and bad. It creates a lot of opportunities to make profits because it's a very, you really have to be able to understand what's going on with each property. But it also is a reason that a lot of people are losing money, and there's a lot of room for shenanigans, right? People um, running some of these properties that are really just hiding the ball, not letting you know what's going on, not some just some stuff that is um, may turn out to be fraud in the future. Some stuff that is just definitely at least negligent. All sorts of that thing. But then on the flip side, there's the potential for some really good operators to do well. I've got people, and I've talked about this guy Earl quite a few times. I think that he sort of should be the standard as far as like and this is something I think Lofty does well, is they provide the ability for the individual operators to, give you a Dropbox with all sorts of due diligence information. And I mean, he puts, every month you're getting P&Ls from him, you're getting bank statements, you're getting mortgage statements, basically, copies of every receipt that gets spent, basically anything that as an owner of that property you would want to have is in this Dropbox, on a regular basis. And so, as far as for a marketplace, I think, one of the things that Lofty could do a lot better is um, provide reporting standards. And by doing that, and have it look something very much like this, right? Like if you're going to let people list stuff on your site, yeah, you can't tell them how to run the property, but you can certainly tell them what's required as far as reporting goes. And I think that's one big flaw in their current system that I'd like to see them change, is just have a uniform reporting requirement. It would make it a lot easier for all of us investors to compare properties across sites. And then the other thing that I think that they're not doing well at the moment is, so right now you have to own a property to bring it onto the platform. They are doing some experiments with people that are uh, in buy raising money to buy properties using Lofty, but it's not really what's going on most of the time. Because of that, I think there's a little bit of a disalignment of interest, because you're in a situation where we're not all buying this together. The co-owner who's bringing it to the platform already owns it, and they're selling out to us, right? And they do have to keep some interest in it, some minimum percent, but it is um, it's a it's in their best interest to get the best price possible for us, versus all of us buying into a deal together. And so that leads me to this next site, Fractional.app. I'm not invested on here yet. This is very much set up for people to raise money to buy deals, and this is the only one that I think that's their main, the main thing that they're doing. I think they do a couple of things well. They have little, individual communities. They have ways for you to, basically pitch your deals. Um, at the moment, they seem to be attracting a lot of people that, my guess is, they just can't raise money anywhere else. And it's not that there are some people on here that I think are successful operators that are bringing deals on here, but there are also people that just, there's just a lot of quirky deals, stuff that's just not what you expect. It's not, it's very, very little of it is true, like just normal real estate investing. There's like a lot of stuff that's like quasi business investments and whatnot. So, um, I don't know. I've been following the deals for a while. I haven't seen anything that was too compelling. There was one flipper who was raising money that I think was doing a really good job, but I haven't seen another project from him since I got on here. I actually just reviewed one of his old ones. So I think that there's a lot that could be taken that's good from this, as far as having they have a built-in community section where you can create your own little section, and then talk about deals and raise money. I think, and so basically I want to tell you all the different features that I'd love to see all in one platform, right? Or maybe there's a couple options for a couple different platforms, but I think if Lofty added some way for people to do this, and and there are operators doing it already. They're talking to people through Discord, they're finding the properties, and then there is at least some, a little bit of this happening. But I think to make it more overt, more an actual feature of the site, could really improve it. And I think one of the things I dislike about this is it seems like there's not really, and sort of like Lofty as well, it looks like they're just letting anybody bring any old project on there. The way numbers are calculated from a lot of them is just, in my mind, pretty sketchy. It's not how I'm used to seeing it as a real estate investor. And so, I think anytime you have, you're helping somebody raise money, then you have, at the same time, you have people that are going to be trying to take advantage of that platform. And so, again, I'd like to see some sort of uniform requirements to be able to list something to raise money, whether, and it's a little bit tougher when it's not a property that's already operating, right? I mean, you can't say, well, I want to see the current P&Ls if you're just buying it or whatnot. But I would like to see like people not just making up their own sort of financials, like that if you've I've done a couple videos on properties on here, and they're just doing weird math sometimes, and so it'd be nice to have some better guidelines, and just sort of again, I mean, I don't want to restrict what people can bring onto the platform. I think having a marketplace type of idea is a good idea, but at the same time, it is problematic if people can just say whatever they want, and it's not sort of there's not sort of some you know screening requirement for like is this actual is there a deal here, or is it at least being presented in a way that it's an apples to apples comparison to other deals on the platform, right? And what I'm talking about, some of them are doing like your total ROI on the deal, like, and so it's like they're taking, or not your average annual ROI, so but they're looking at your, so like if you doubled your money over 5 years, they're saying you made 20% a year. And if you know how compounding returns work, that's not accurate, right? Um, that's just doing like almost a simple interest calculation, but I've seen it more than once on here, so I don't know. That sort of that's been why I've shied away from this platform, is that a lot of the deals are either more of a business deal than they are a real estate deal, or I've just seen some math that I'm just not don't love. But anyway, I think adding something like this where you have the ability to raise capital to then bring platforms onto a site like Lofty, where you have the marketplace and then people can trade it in the future, is really necessary. And that's the other thing too, right? Like for Lofty being a marketplace, you have exit liquidity. You can buy and sell these investments at any point in time. And so that brings me to Mogul. Mogul's a site where it's different. It's not a marketplace. The company themselves are, they have their own team that's going out and finding these deals. So not just anybody can bring a property to the site. They're actually going out. You have guys that have they have real estate experience. I want to say real estate experience, but that sounds kind of funny. But they have actual real estate experience where they've done this professionally. Um, Pick what in my mind are some of the best deals, relative to all the other platforms, and then you can buy into them on here. But once it sells out, then that's it. Once it sells out, then that's it. There's no more trading. There's no secondary market, right? And so that creates a liquidity problem. You just have to hold this until they decide to sell. They've talked about creating some secondary market with liquidity, but I don't know what that's going to look like yet. I'd love it if it looked just like how or a lot like how trading on Lofty goes. But just from hearing them talk about it, I think that it's going to be a little bit more. I think there's going to be a little more guardrails regarding pricing on that. So we'll see how that turns out. I think it's going to be about a year away. It sounded like, but the other thing that these guys don't have that exit liquidity until it actually sells. But one of the things that I love about what they're doing is this, their analysis tab is they're really, this is the type of stuff as a, long-term real estate investor that I'm just used to looking at, right? Like how do they calculate their IRR? How, what are their assumptions as far as rents go, property taxes, insurance? Like, so they're giving me all the assumptions. I can really dig into it. They're showing, okay, on this one, they're modeling a refinance, when is this happening? In year 5, it's a refinance, like it's showing you where the break even point is, all this sort of stuff. I mean, I love this setup. Like this is the type of thing that I want to be able to look at when I'm analyzing a deal. And then the nice thing too is I can come in and adjust a lot of this stuff. Um, if I think they're being a little too aggressive on their rent, I can change the rent amount, or I can change, most of their assumptions you can change, and it gives you the ability to get a good estimate. One of the things I'd like to see them do, in addition to adding the secondary market, is to add something like this where you have a drop box for each property. They're talking about, okay, I'm an owner in this property, right? I bought some shares. I'm going to get a K1. I'm an actual owner of, direct ownership in this property. Um, I'd like, that means to me, I should have access to all the books and records, right? So like, I'd like to see the P&L every month for this, and I'd like to see, I know every month what I get paid out, and they are doing a great job at the moment of paying out on deals that I bought. But I'd like to actually see the accounting that goes into it. I think when I brought that up, they were kind of open to it. They thought that their average client wouldn't actually care about it. And maybe they're right because the way this is set up, especially with no trading, um, it's very much we're just, hey, it's their business and we're kind of just investing in their deals. But at the same time, it's being pitched as I'm an owner in this deal, and so I'd like to know how it's going on a month-to-month basis. But yeah, those are the only two things. Like I just had a friend of mine ask me like, "Hey, I'm brand new to fractional real estate. Where would you get started?" This is where I've been pointing people. I mean, I think it's the simplest. Um, it's one of the simplest platforms to understand. They're on average, they're putting out, good deals. They have some that I'm not buying. Like I didn't buy some of this one. I didn't buy some of that one, although I don't know if that was even an option. But I mean, there's some of them that I'm passing on. But on average, I think they're doing a good job picking deals. And I don't know that I've said it yet. Just because I'm investing in some sites or I'm not, doesn't mean that you should. You should do your own due diligence on every platform and on every property that you buy, every note. If you're buying mortgages, we're going to talk about that in a second. All of these platforms are relatively new, and this is kind of the Wild West. I mean, they're all doing things in a slightly different way, and so it's something that there's a true risk of loss on every single platform, and so you really want to dig into that on your own and understand like what it is you're buying and what it isn't. And so I'm going to move on to the next one, the ground floor. This is actually the one with the longest track record, I believe. They've been around over 10 years. This is a platform where you're buying small pieces of mortgages instead of pieces of actual equity in the property. So you're a mortgage investor, not an equity investor in the property. You can buy pieces of individual ones. They're trying to push people to their flywheel portfolio at the moment, but you can still set up an account and ask for them to open up these individual loans to you. I think the default just shows you the flywheel portfolio and maybe some notes or something at the moment, but you can still get access to the others. What I think ground floor is doing great. One, it's giving us access to debt investments, and I always have enjoyed that. I think that buying pieces of mortgages is some of the easiest way to get really dependable cash flow. Um, and uh, this again is one company that's making all the loans, and so not just anybody can bring a loan to this platform and sell pieces of it. This is, sort of just like what I was explaining with Mogul. It's a company, they're doing the underwriting, they're making the decisions, and then you can invest in pieces of it. I really like a lot of their reporting. This is showing like all the ones that I've had pay off so far. So I've had 42 that have repaid so far. What my actual return is on those ones that have paid off, which is actually a little bit better than my expected rate of return. That's because some of them got extended, and I don't know, maybe they paid some penalty or something for that. I'm not really sure why it ended up higher, but you can get some real stats on how things have gone. They do give you a little bit of an update when the mortgages are in place, but I actually, for what this platform is, there's not a whole lot that I have to complain about it. I would like a secondary market to be able to sell my LROs. I think it's not the end of the world that you can't, because they're mostly short-term loans. I mean, I think 18 months is the longest they can be. And, I've only been investing on this site for uh, around 7 months now, and I've had 42 loans pay off, so it's not as if you're not getting some liquidity every month, right? Like almost every single week, I'll have some loans pay off, and I'll go ahead and reinvest in more. You can see I have little pieces of 126 at the moment. And so then, in addition to the 42 that paid off, that means 168, that I've bought pieces of over the course of that time. I think this is, there's not a whole lot I would change about ground floor, like I said, except, creating that secondary option. But I'd also love to see, if we were going to just create the ideal setup, have a site where I could buy some of these deals, but also own some properties on that site too, right? Do all my real estate investing on one platform. Maybe I'm just getting a little greedy there, right? I actually don't mind spreading my risk across multiple platforms at the moment. But like someday in the future, I could imagine where it's more established that that I could trust one to do all of my investing, sort of like how people just use one, stock brokerage platform like I use, like E-Trade or something like that, where you buy all of your stocks and bonds on that one platform, and nobody really thinks, "Ooh, I need to have two or three different platforms," right? Like people have a little bit of trust in that system. Part of it is that because they're securities and it's more regulated. These ones, and that's one thing that Ground Floor is doing. They are, they use these are, let's see, offerings or securities under regulation on this website. Like they're actually selling securities on here, and so there's a little bit more protection than, on or at least more regulation than on Lofty and Mogul. They're both operating in what a lot of people would just call a loophole, or what it's often referred to as a safe harbor. A certain they're operating in a certain way to make sure that they're not being classified as a security, and that's their goal. Because there's just a whole lot of expense that comes with that, and I'll show you. Like one of the most well-known sites is Arrived Homes, where you can buy, both. They have a credit fund, which is investing in a fund of mortgages, and they have, where you can invest in individual properties. They are securitizing these and selling securities and using a broker dealer to do so. But because of that, there's so much cost built into each deal for the regulatory compliance that they just, their stated returns are terrible. Like I just wouldn't invest, like what they say you'll get paid on these deals. Why don't are just, well, let's see. I'm trying to find what. Yeah, like okay, they're saying you're going to get 4.5%. Let's see. If you have 4.5% appreciation and 3.69% annual cash flow, like your total annualized returns is 5.9%. Well, if I'm going to get a return that low, I'm just going to put my money in an index fund in the stock market or something, right? Like, so they're not, I think that one, they're not doing a great job picking properties. They don't have a secondary market at the moment, but that's supposed to change in the next month or two. And although the regulatory compliance, it should, I think they do it to give people more of a feeling of safety, and it's possible that it really is, making your investment a little bit safer. But at the same time, it's just nerfing your return so much that it just doesn't seem worth it to me. So that's been my real complaint about them. And then they have a lot of copycats. Like Real Bricks seems to be doing like exactly the same thing, to where they're even selling through the same broker dealer. They're just smaller. They're in one market. Um, they have slightly higher dividends that they're offering, but again, I mean, just not very high. And when you dig into it, it's hard to understand how they even expect to pay some of those at the rate that they are. Another one that is offering. I think these ones are actually a little different. I think that they. Um, I think they're not registered securities. I think that they're like, and I'm not obviously, I'm not a securities attorney. I'm not giving you any advice on that sort of thing. And I'm not even an attorney anymore. I retired my license several years ago, and so don't take this as advice on like that specific stuff. And even when I wouldn't have been able to answer these questions. But I think that they're using a different, where they are filing stuff with the SEC, but I don't think they're actually registering this. I don't know. It's not, like I said. but it is, but it's adding a lot of expense in what they're doing. And so this is a site where you can buy pieces of student rentals specifically. Again, it's a platform like Mogul, and Arrived was doing this too, where it's just the company going out and buying deals. Here, it seems like there's a team that has some true expertise in picking deals that should be good deals. But there's the way there's just some related party transactions that made me uncomfortable here. It seems like somebody's making money on these deals, but not necessarily us who's coming in and buying into them at this point. And again, their stated returns on most of these are just not very good. Now, their stated yields, right? Their cash on cash returns are pretty low, but then they're like, oh, but it's going to be a really big annualized return because we're going to get you a lot of appreciation. For me, that's usually a pretty, I look at that pretty negatively. Like, where is that? I want to know the story. Like, yes, sometimes deals do just give you a lot more appreciation than they do, yield, but I want to really understand where that's coming from. And they're not doing a good job of telling that story. They also don't really answer questions that I've sent their way. So, that's something that they could do better. But one thing that I really like what they're doing is they're sort of innovating on how they're managing properties. And I really like that it's like that they've picked a niche. One of the things that I think would be interesting is if you had like a platform, and I guess sort of Lofty is like this, right? Like where you could have individual groups having their niche, raise if they could raise money through that platform, buy deals, and like have um true subject matter experts that are picking those deals, but then on the same platform have a different group of experts that are picking other deals, right? So I think that there's sort of a need for that. um Arc 7 logged me out. They always log me out quicker than everybody else. That's one of the things I wish they did different. Um, this is one that it's like a Mogul or Arrived Homed in that it's one company that's buying the deals. Again, they have pretty low stated returns on most of their deals. What they say you're going to get is pretty low. But they do have a secondary market, and but it's not very robust. There's not a ton of trading. I don't know why that is. They give you the bid ask spread, um, but it doesn't. You're never seeing the types of discounts that like on Lofty. I get huge discounts when a property is underperforming, and so it gives me the ability to go in and get it like if some of these properties were significantly discounted, then they'd be worth me going in and buying, right? So I think that you end up like you have uh, a lot of people, like you have 179 shares of this for sale right now, and only 10 people trying to buy, and there's a pretty big spread in their pricing, right? And so if in order to actually sell these, that discount I think needs to occur. And when I was looking at this, I'd want to pay even less than what these people are offering, right? So I think this marketplace is just not very well developed yet. And I think that the deals that they're buying, they're just not, if you compare these to the average deal that you see on Mogul, the the year one yields are like half of what you see on Mogul. Now, again, I think on here they're securitizing the properties, creating securities out of them, and so that expense, it's just really hard to overcome that expense. So one of the things that I think as an industry really needs to happen is that we see some lobbying to maybe have a new type of security or something. Like and obviously the industry is really in its infancy, but like I shouldn't have to do the same thing that you do to sell a stock in order, a stock in a company like Apple, for example, in order for me to sell you a piece of a home, right? Because one is a multi-billion-dollar company, maybe trillion dollars, I don't know, that like is virtually impossible for any single individual to really know everything that's going on in that company. Like even the CEO, there's plenty of stuff that he doesn't know on a day-to-day basis that's happening there. Where compare that to buying a piece of a single family home, that has one tenant in it, you'd think that there'd be a much more streamlined way, um, something that you could have uh, some framework that they could set up that says, okay, all of these are risks that we're going to be with all real estate, and maybe you said it like, I don't know. I think ground floor must be doing this, like where because they're doing like, basically we have all the same risks and everything with each one. Because it seems like they're somehow handling that cost and still paying a pretty decent return relative to, um, a debt product. And so, I think that that might be one of the things that in the future, I know everybody or a lot of the platforms are trying to avoid falling into a regulated niche, which I think makes sense today because of how costly it is. But at some point, there should be a move to, hey, please come regulate us, but let's do it in a way that it's not going to cost us $50,000 per entity that we're securitizing. Let's make it so that we can have some standards, and if we meet these standards, we're going to be able to do it for significant less. Maybe that's real pie in the sky thinking from me. Maybe that's never going to happen, and it just makes sense to operate in some of these different safe harbors, or operating in such a way that it's not a security. They're achieving it in different ways. Um, it's beyond the scope of what I'm going to talk about today. But none of the ones that are registered securities are providing returns that are at all interesting to me. I mean, again, like, if I'm not, if it just seems too low. Like, why wouldn't I just buy a much more established product at that time? And then the only other one that I think is super innovative is Sol's Law. Now, this is one, and this is actually, they're in the process of revamping their site, so it's not a great example at the moment. But they're selling. It's basically allowing homeowners to sell little pieces of their equity up front. So it's a much different niche than what we've seen in any of the other sites. I'd like to see more of this because I think that it's a product that home sellers could really use, and from an investment perspective, I think that it can be set up in such a way that it's a great investment as well. Um, this one is one that I think is one of the best examples. When I first, if you go back and watch my video the first time I tried to use this, I'm not a crypto guy at all. I don't know anything about, I had to set up a new type of wallet, like it was a Gobi wallet. And my actual thing I was buying, I think, was an NFT. Well, it's not. I mean, it's a piece of a DAC, but I got like an NFT with it. I don't even know. I don't. You can tell, like, I don't know how to talk about this, and I think this is one of the problems that a lot of these platforms are running into. So, like, Lofty is also, a lot of these are using the blockchain in certain ways. They're using smart contracts, um, to like record these ownership percentages. I know Mogul does it, but if you interact with their site, you have no idea that you are, right? Like, it just looks like you're on any like regular website that that you would go and buy stocks on, or buy, you know, any sort of site that you interact with, your bank's website or something. As far as, you just send money normally. It just came out of my bank account. I bought shares. There was no real indication in the process of buying that crypto, that blockchain technology, that Web3 stuff was involved whatsoever. Um, Initially, the way this is set up now, it's very much intimidating to a non crypto native. I think that that's why they're going to revamp this. Lofty is sort of in between there. There is like you do have your separate wallet. They have their wallet on here. You're getting, I had to learn what USDC was because that's where, the money I had to get in there. The other day I had to put Algorand in my wallet to make a transaction work because there wasn't enough in there to fund a smart contract. So that, they could, one of the things that I think all the sites that have any of that sort of stuff on the front end, I think that they just need to hide it from users. I think there's a lot of the users that they attract are from the crypto world, and there are a lot of people that are interested in the Web3 aspects of it, the decentralization and whatnot. And I think that um, that's fine, but I think that your typical person that's looking to invest in real estate online isn't necessarily looking for that as well. And so um, I don't think there's any reason in the user interface that I need to know that any of that is happening, right? I don't need to know that it's tokens. I don't need to know that, and I guess they're trying to not call it shares because they're not, um, they're trying to avoid you thinking it's a security. But I think that the more like that you just are thinking of, okay, I bought X% of this property. I don't know. I think that there's some the more that's hidden, the less intimidating it is for old guys like me who are just, I've been investing in real estate for 20 years. I think that there's a lot of future in the fractionalization of real estate and being able to invest in little pieces, and there's a lot of advantages, and I spend a lot of time talking about that. Um, but I don't necessarily need to know how that's being accomplished, right? And I think and there's no reason to like completely hide that because I know there's some guys that are all about that and want to move stuff into their own separate wallets and do be able to do different things like that where they're maybe staking them somewhere else. They're which is again beyond the scope of what I want to talk about right now. But so I guess that's something I'd like to see them a lot of them hide, which is interesting because I have heard some people say, no, no, I want it to be purely like a Web3, completely decentralized type of asset. But I think you'd attract a lot more users. I think Mogul sells out their properties amazingly fast compared to, a similar equity raise on Lofty. And I think it's because they're attracting people that are just real estate people, just looking at that deal. There's not all this mental friction happening to try to understand how things work differently. It's just, hey, this is the property. You're buying X% of that property. You're giving me Y dollars. And, that's our transaction. Like, so I think that is a good example of a much lower friction for someone with my brain to get there. And even though, and again, I mean, I think I've heard that this is on, they're using the Avalanche blockchain or something, one I had never heard of, and that's and you can find it somewhere on their site or somewhere I've read about it, but it doesn't, there's no reason for me as a real estate guy looking to buy a piece of a property. There's no reason for me to understand the technology that's being used to make this possible, right? To make the little smart contracts happen and the fractionalization work in a more simple way. Um, and so, uh, that's all the ones that I wanted to cover. But I think, and I know this has been really long. If you're still watching, I appreciate it. But I think like one of the things one of the people that actually more than one person that I've talked to has brought up having a platform where you could buy pieces from several different, you could buy some Lofty tokens, you could buy some stuff from Mogul, and I think that there's like, uh, I think there's a really interesting opportunity there, right? Because like again, like when we were talking about, well, if I invest in stocks, I don't have to use different brokers to buy different stocks, right? Like, I mean, they're just, and I guess you kind of do, like maybe if they're on foreign exchanges or something. But if all I'm buying is U.S. real estate, I don't want to have to go to Mogul to buy the ones that the Mogul guys buy, and go to Arrive to buy pieces of theirs, and go to Arc 7 to buy pieces of theirs. Like, it'd be fantastic to have one platform where you can just buy and sell from all the different sites. And I think, because Lofty's already set up as a marketplace, they're sort of the obvious one that could do that. Um, I think, there's probably some technical problems or, challenges with that because, like, for example, Lofty's using Algorand, Sol's lots on Chia. Like I said, think I think Mogul's on Avalanche or something like that, and I have no idea. I'm pretty sure that Fractional is using blockchain technology as well. I have no idea what they're on either. Um, Pretty sure I read that, but and so I don't know. I know when I move my money from Coinbase to some of these other platforms, I had to go through like this weird exchange process, and so maybe it's too technically difficult to be able to do that over time. I'm not sure, but I'd love to see that to where like regardless of what site somebody is bringing their property on, I can just log into one dashboard and buy stuff on any of them. I think that'd be kind of cool. But but long before we get there, I'd love to see some improvements in all of these sites. Um, in different aspects, right? Like, I mean, I think all the ones. So currently, I'm invested on Lofty, Mogul, Ground Floor, Sol's Lot, and Collab. Um, I think that they all have Collab's the one I'm the least excited about. I really bought a piece of, the only deal that to me seems like it's okay returns. But I think they're just really innovative in what they're doing, the way that they are, the technology they're using on their management side is really interesting. And then I do really like student housing. I just don't think it doesn't seem like a lot of the profits are being passed along to us from that. But I bought a piece into there, hoping that I'd like get a little bit of extra info once I was actually a user of the site, and it seemed like I did, but it still wasn't what I wanted. But all the others, I think I'm on them because I think that they're going forward probably going to be the winners, and I'm sure there'll be some that some of those will probably fail, and we'll probably see other ones come along and some of them might go under just for no real reason. Like, for example, Lofty, and I don't know if this is the case, this is just some conjecture, but like they have some side project that they're working on that seems like it's getting a lot of traction. At some point it might turn out that that's more profitable than continuing to deal with a lot of cantankerous investors on a platform that's probably hasn't grown nearly as fast as they hoped it would. I can't imagine I imagine that they had hoped to have a lot more properties on the platform at this point, but maybe not. I mean, maybe they're happy with it. I don't know. I've never talked to them about like, where is it relative to where they were hoping to be. Um, but any one of these could have like I mentioned Landa earlier. I just watched something today that was talking about how they have multiple lawsuits and there's properties in foreclosure and uh, I don't know. It seems like a giant mess, right? And that was one that two or 3 years ago, all sorts of people on the internet were talking about. Oh, that's the best one. And so, you really have to dig into all of them. They all, do your own due diligence. Really understand the platform. Understand the properties that you're getting pieces of. What that piece actually is, right? Am I buying a security? Am I buying? What am I actually buying on each one? Because it does differ quite a bit and then what rights are coming with that. Like I saw there's a lot of sites that pretend to be fractional real estate sites that they're just REITs. There's a private REIT which have been around for a very long time and they're pretending that it's fractional real estate. I think because fractional real estate is like a good idea and it's gaining a lot of traction, and so people just want to say that's what they're doing, and which creates some confusion in the marketplace. Anyway, that's really, I think, everything I wanted to talk about. But I guess my real question to everybody is like, and I should have asked this earlier, but what do you think? What would you like to see um, different on some of these platforms? And you know what? I'm going to stop and I'm going to put this in the beginning. So anyway, until next time, I'm going to see. This is my mistake, right? But until next time, I'm going to keep making mistakes so that you don't have to.